September 11, 2001. A plane crashes into the North Tower. Everyone you worked with is dead, while you sit back in your chair with a smile on your face, making hundreds of millions of dollars.
Let's talk about finance lessons from the 8th episode of Billions, based on my work experience at Goldman Sachs in New York City, and based on my work experience at the top hedge funds in the world. Now, please be sure to comment, like, and subscribe, and stick around, because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. 3 key topics in this episode that we will discuss are: number 1, how Bobby made $750 million on 9/11, and how shady investors made a fortune betting against the US airlines right before 9/11. And separately, I'll very quickly discuss my experience working at Goldman Sachs in New York City on 9/11 and the aftermath. The second topic is Bobby's creation of a panic room at his office, and why so many billionaires in the finance sector like Peter Thiel and top hedge fund manager in history named Julian Robertson create either their own panic rooms or bunkers, or what they do is they buy land in New Zealand just in case democracy fails in the United States, and also to survive an unlikely nuclear apocalypse. Topic 3 is the government investigation of Bobby Axelrod's portfolio manager Donnie, and the genius twist at the end of episode 8. Topic 1. In this episode, a reporter publishes a story on how Bobby made $750 million on 9/11, which of course is another public relations disaster for Axe.
Bobby Axelrod may have made much of his considerable fortune by preying on aviation, hotel, and shipping companies when they were most vulnerable, shorting their stock during those early moments after the September 11th terrorist attack.
Now, on 9/11, at 9:03 a.m., the second plane crashed into the World Trade Center, and as a result, the markets in the United States were closed that day and did not reopen until September 17th. And on 9/11, when the markets were closed in the US, the European markets remained open, and hypothetically speaking, investors like Bobby could have shorted airlines and hotels and anything to do with travel in the European markets that day. It's very tough, though, to make $750 million by just shorting stocks. So he likely bought many put options on European airlines like British Airways and Lufthansa, which were down both 21% and 14% respectively that day. Now, a put is a derivative instrument that you can buy that costs a relatively small amount of money, and it can increase in value hundreds and hundreds of percent if the stock the put is based on goes down. And unlike shorting a stock, a put is a much safer way to bet against a stock, because if the stock that the put is based on goes up, then all you lose is what you paid for the put. And a short is way more dangerous because you can lose an unlimited amount of money if the stock you're short goes up, which is what caused some hedge funds to go bankrupt when they shorted stock GameStop, which was up literally more than 29 times in the month of January of 2021. Now, here are 3 other ways Bobby could have made money on 9/11. Number 1, buying gold. Gold increased in London trading that day by about 6%, as investors love to own gold when there's uncertainty. Number 2, he could have bought oil, which rose just over 5% on 9/11, because there were some fears out there of the attack that was somehow linked to the Middle East, which of course was correct. And the third way Bobby could have made money on 9/11 is through shorting the US dollar, as the foreign exchange markets are very liquid. And the US dollar was down that day versus the euro, the British pound, and the yen as well. Speaking of the yen, on 9/11, I worked on the international equities trading floor at Goldman Sachs on the 49th floor of the building. This building is right here, actually. And many of my clients own Japanese equities, which I'll come back to in a second. Now, when the first plane hit, I looked out the window and I saw the damage done to the first tower. And we thought it was a small plane that hit, as the buildings were enormous. So I did a sign of the cross, and then I remained in my chair. Then after the second plane hit, of course, we evacuated. And what we did was we walked down 49 floors, and I took my team to Battery Park, as you can see here, and we prayed and we hid behind a fence, as we thought that the buildings would actually fall this way towards us, and everybody would get pushed into the Hudson River. Then we watched the tower collapse onto itself, and then the smoke blew south, so we couldn't see anything for hours. And what we did was we stayed in the park hiding. And every now and then, we would hear many more airplanes, and people screamed as we all thought it was more attacks. And eventually we saw an opening in the sky, and it was the Air Force, and people cheered. It was terrible that day. Now, the only communication devices that worked that day were Blackberries. So what I did was I borrowed one from a stranger, and I texted my family that lived by the largest airport beside Toronto. And I warned them to stay away from the airport as we heard that all flights were being sent directly to Canada. And that night at my house in New York City on the Upper East Side, I received many Hotmail emails and MSN Messenger messages from my Goldman Sachs clients asking me to liquidate their holdings in the Japanese markets because the markets were open that night in Japan. And so what I had to do is I had to set up a trading floor at my home using Hotmail. And one of my clients named Naoka Kushitani, God bless her, she worked for a fiduciary. She passed away that day as she worked at one of the floors of the tower. God bless her. And as you can see right here, finance company Cantor Fitzgerald lost 658 employees that day. And Hank Paulson, who was the CEO of Goldman Sachs at that point in time, sent a really nice reassuring voicemail to all of us that day. And here, if we go to the Wayback Machine website, we can see Goldman's reaction that day. And if you search for other web pages from other companies in September of 2001 on this website here, you'll see similar reactions. Now, when we returned to work on the trading floor on September 17th, what I did was this. I opened my Bloomberg terminal, and I was really curious about the put option activity on the major US airlines a couple of days before 9/11. So what I did was I typed OMON, which is option monitor, on Bloomberg. And I saw that the put volume on the US airlines before 9/11 was at an all-time high. This means that somebody knew and profited immensely from the 9/11 attacks. Now, separately, Bobby Axelrod's fictitious firm that he was a member of lost most of their employees that day. And the reason why Bobby was not at work that day is because of this.
Tell me.
The reason Axe wasn't in the towers on 9/11 with the rest of his company was because he was at his attorney's office going over a severance package.
So Bobby was being let go, but he was still at his firm on 9/11. And he was let go because of his shady trades. And since most employees died in his firm that day, nobody mentioned the fact that he was being let go. And here's what he has to say about his trades on 9/11.
I'm not proud. It was before anyone knew for sure it was terrorism. I just saw an opportunity to make $750 million in a day.
Now, on September 17th, the markets reopened, and the Dow dropped 7% that day, which was a catalyst to push the U.S. economy into a recession. And other U.S. markets fell much more, which led to a $1.4 trillion loss in market capitalization. Now, the Dow dropped less than the S&P 500 because investors were more inclined then to own large-cap Dow 30 components, which have much more revenue exposure overseas. And because these larger Dow 30 components have higher dividend yields, so they're safer investments, relatively speaking. Now, when companies reported their Q3 earnings in the September quarter of 2001, many of them took very large charges in an effort to kitchen sink the financials, meaning they reported awful earnings and they took massive charges because everybody else was expected to do so at that point in time. Now, discussing 9/11 in a television show based on finance in New York City is, of course, a very sensitive topic. And the writers did a superb job of showing patriotism in this episode through patriotic ties, as well as showing the Twin Towers in this photograph pretty close to an American flag on the wall there. And notice the mention of bin Laden in this scene right here. Topic 2. Bobby becomes increasingly paranoid about who is loyal to him. And as a result, he sets up a panic room at work. Now, a lot of billionaires in finance take this to the next level, as they make panic rooms at their offices and more often in their homes in New York City in their townhouses. Like we see right here, actually, with this Tribeca located house in New York City that has a 6,500 square foot panic room. And these panic rooms have bulletproof walls, ceilings, and floors. And since the 1980s, all US embassies have panic rooms. And billionaires in finance really take it to the next level, though. As Julian Robertson, who founded the most influential hedge fund ever called Tiger, purchased a massive place in New Zealand at the peak of the Cold War, just in case there was a nuclear war, as New Zealand would be relatively insulated from nuclear fallout perspective. Quick side note. Many of the top hedge funds in the world were founded by former Tiger employees, meaning that they worked for Julian Robertson. And we refer to these funds as Tiger Cubs. And they include Chase Coleman's Tiger Global, as well as Maverick, Lone Pine, as well as Viking. Now, these hedge funds are very successful because they learned from Julian Robertson to be very long-term focused and not day traders. And these Tiger Cubs often put on 1 to 3 year positions on the long and short sides of their portfolios. Let's get back to the New Zealand topic though. Venture capitalist Peter Thiel, who was the first notable investor in Facebook and Palantir, got his US citizenship in New Zealand as well. And many US billionaires bought places in New Zealand after the 2016 election and also given the insurgency on January 6 of 2021. And Sam Altman, who is the head of OpenAI, has an agreement with his friend Peter Thiel that if a nuclear war or a virus breaks out, or if an AI-based disaster takes place that threatens humanity, then he will fly with Peter Thiel on a private jet to Thiel's property in New Zealand. And in the 2 days after the 2016 election, American billionaires looking into getting New Zealand citizenship increased materially. And Reid Hoffman, who is the co-founder of LinkedIn, who also worked with Peter Thiel at PayPal, even said that saying you're buying a place in New Zealand is kind of a wink, wink, say no more. And even Mark Zuckerberg, after buying and combining these 5 houses in Palo Alto, after he combined all 5, apparently he built a massive panic room underground. Topic 3. Axe is paranoid because he knows that somebody in his firm is partnering with the government to get him arrested for insider information. And it might be Donnie or somebody else.
Everything you do will be picked apart until I discover who is on the level and who's whistling.
Now, Axe thinks the traitor might actually be Donnie.
Have you ever met anybody that worked at the FBI?
I mean, just socially.
No, I don't think so.
Or maybe it's this portfolio manager here named Pouch who had insider information in cross-code trucking back in episode 4 when I explained how a short works.
What about that cross-code trucking play, Pouch? You still have a problem with it?
Hey, I made my peace with that.
Now, Bobby ultimately concludes that the traitor is Pouch and not Donnie, so he lets Pouch go.
You're fired. You got nailed by the SEC, so you tried to sell me out? You wearing a wire right now?
No.
It's a really interesting twist, though. And maybe the real informant is Donnie? We don't know yet, though.
I'm doubting you're even for real. You need evidence. Bobby Axelrod trading material non-public information. Get it done!
Wait a second. If the real informant is Donnie and not Pouch, then why did Axe let Pouch go? And why did Pouch get investigated by the SEC? Because the government found out that Axe was aware that there was a mole in his company. And the government spent so much time and money making Donnie turn against Axe. And the government knows that they can arrest Axe with Donnie's cooperation. And as a result, the government set up a meeting with Pouch and a paper trail so that Axe would find out and Axe would fire Pouch and not Donnie. But Axe is a master chess player and the quintessential master of game theory. So he was definitely aware of all of this, and then the ending scene was brilliant as this happened.
I knew what was going on. We had to put on a show, but it still rattled my nerves.
That was the only way I could convince Rhodes you were legit.
It turns out Donnie is a double agent and is working with Bobby to mislead the government investigation. Let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. This episode accurately explained how Axe could have generated a positive return on 9/11 by betting against airlines and other securities. Although the writers should have discussed how Bobby used options, meaning puts, as well in making $750 million that quickly because it's unlikely to make that much money that fast without using options. And the episode also accurately showed Axe's paranoia in creating a panic room, which many billionaires in the hedge fund industry now have. Also, I love the drama with Donnie partnering with Axe as well, although it seemed a little bit far-fetched that Axe or any hedge fund billionaire would have such great intel when it comes to government investigations. As a result, I'm going to give this episode a hold rating. Please like, comment, and subscribe, and I'll see you soon in our next reaction video when we react to episode 9. Thank you.